Welcome to Tim's Strategy of the Week series. Last week we discussed the wisdom of following the smart money guys when trading. Today we're going to look at a great intraday smart money strategy. Hi, this is Tim from TradingStrategyGuides.com. Thanks for coming back for this installment of the Strategy of the Week. Today we're going to look at the value area trading strategy, an intraday trading strategy that is designed to follow the smart money traders. Last week we talked about why it's good for us small retail guys to follow the smart money traders, the big institutional traders in our trading strategies. Interestingly enough, TradingView introduced a cool new drawing tool that really turned my crank. The Fixed Range Volume Profile tool. This tool analyzes the price levels at which there was significant volume traded and plots them on the chart. It allows us to see where the important price levels are based upon the amount of volume that was traded at those prices. In other words, it shows us the price levels that the big institutional traders consider significant levels. Sheesh, that's like handing us a crystal ball, I know, I'm pretty hung up on crystal balls, or time machines. Imagine being able to look 5 minutes into the future. But I digress. So the strategy wizards at Trading Strategy Guides developed this awesome strategy using this new Fixed Range Volume Profile tool. The calculations behind the tool are way beyond the scope of this video. I'll show you how to use it for the purpose of this strategy. But if you want more details about it, I've included the link below to the TSG blog about the tool and the strategy. Plus, check out the tool in your TradingView platform. It's pretty dang cool. There is one caveat that you need to know. In order to apply the volume profiles on TradingView, you need to have a pro level subscription or higher. The volume profiles tool is such a valuable indicator that most professional trading platforms will charge you a fee to use it. You can use the volume profiles on whatever time frame you prefer. I'm going to be looking at it on the 15-minute time frame. To apply volume profiles on your TradingView charts, click up here on the Indicators button, select the volume profile, and you'll see Session Volume right here. Now I've checked the little star over here so that it adds it to my favorites list. Then you can click X to close that, and the volume profiles show up on your chart. It's nice because it automatically plots the volume profiles for each session. When the market closes, then reopens, you have a brand new volume profile. So this happens to be the E-mini Dow Jones futures for about 5 days worth of data. So that gives you an idea of significant price levels based on volume. The volume will be placed on a horizontal scale rather than at the bottom of your charts where the standard volume indicator that I hate so much is displayed. You may remember my rant about someone deciding that it was a great idea to put the vertical volume bars in the same window as the price candles, so they slam into each other and confuse everything, right? Once again, I digress. Here's the thing. I believe the volume profiles to be superior to the standard volume. Let me explain. The horizontal volume profile is based on price rather than time. The time-based volume bars only tell you the movement of the trend, while the volume profiles tell you where there is institutional buying and selling taking place and the price at which large blocks of money are being traded. This is very helpful in finding institutional support and resistance levels. Now, in order to make the value area levels a bit more visible, go to the volume profile settings and under the Style tab, change the color for Value Area Up and Value Area Down. I changed them to purple and orange to better distinguish between the value areas and the other areas. The value areas will show you the buying and selling in the 70% area. So everything that is purple and orange highlights where 70% of the entire trade volume occurred. Okay? Now here are the top 3 reasons why you should use value area trading. First of all, it plots on a vertical scale. It gives you a specific price level where the most volume has occurred. Secondly, you gain a lot more information about price levels and volume at each price level. But most importantly, number 3, it makes it easier to spot institutional support and resistance levels. So why is it important to know at what prices 70% of the trade volume has occurred? Well, large traders and institutional traders, the big guys, I call the smart money because it's smart for us to follow them. They'll be executing heavy volume trades. Wherever you see institutional trading activity, you're going to see an accumulation of large orders because they're bigger traders. This is a kind of self-fulfilling prophecy because where there's a large volume, there's going to be strong support and resistance levels. Wherever you see a thin volume, you'll notice that the price moves through it very quickly. Here's the lesson to learn about thin volume. The small volume areas indicate a lack of trading activity. What typically happens when the price moves from the value area levels and goes into these thin volume areas, the price will travel really quickly to the next value area. Here's some other information that value area trading can provide. For example, if we're short, we use thin volume areas for the stop loss placement. We want to get stopped out when the price goes from value area levels to thin volume levels because there is no volume and there is a high probability for the price to move further against you since there is no resistance to stop the price from rallying. So let's talk about some secrets on how to improve trading using the value area and the 80% rule. The 80% rule asserts that if the stock price opens or moves above or below the value area, but then returns to the value area twice for 2 half-hour periods, which is represented by 4 bars on our 15-minute chart, then we have an 80% probability that the value area will be filled. And that's just trader speak to say that price will move to the other side of the value area. For example, if the price action stays in the value area for 3 consecutive 15-minute bars, and if the following bar opens inside the value area, the market has been inside the value area for 2 half-hour periods. This is the moment to watch for the 80% rule. Just so you know, this isn't the strategy for today. It's kind of a bonus day trading strategy with an 80% reported win rate. A good strategy you can build around the value area is to try to capture a fill-up of the value area. You can build 2 different trading scenarios. If the price opens above the value area but then falls in the value area for 2 consecutive half-hour periods, there's an 80% probability of the market filling the value area, so you'll want to take a sell position. On the other hand, if the price opens below the value area but then rallies in the value area for 2 consecutive half-hour periods, there's an 80% probability of the market filling the value area, so you'll want to take a buy position. And that brings us to today's strategy. This strategy is designed to take advantage of the fast intraday price movements. For this, we're going to use the point of control or POC levels, which are like a magnet, and they tend to pull the price near that POC level. The POC is the big red line the indicator shows and represents the highest volume traded inside the value area. The POC levels can act as a good support or resistance level. Just to be sure we're all on the same page, if the price is below the POC, it will act as a resistance level, and if the price is above the POC, it will act as a support level. Let's talk about one change that you need to make to the indicator. Right-click on the volume profile indicator, select Settings, select the Inputs tab, and check the box that says Extend POC Right. What that will do is take the POC red line and extend it as far right as it can go until it runs into another one of the indicators. Now here's the trade plan. First of all, the current day's POC should align with yesterday's POC. There should be no more than 2 volume blocks apart. So you can see yesterday's POC right here, today's POC right here. They need to be within 2 volume blocks of each other right there. Once this condition is satisfied, it's time to decide which direction to take the trade. Which brings us to step number 2. If the stock is spending more time above the POC, then the trade direction is long. If the stock is spending more time below the POC, the trade direction is short. So you can see that most of the price action has been below these 2 POCs. So we sell on this close below today's POC. You'll want to put your stop loss for a short above the current day's high. If you're trading long, you'll want to put your stop below the current day's low, and you can close the position if you have a 15-minute candle close on the opposite side of the POC, and if you don't, then just close at the end of the day. So in summary, if you want to escape the high degree of inherent randomness that comes with the price of any tradable instrument, you should look into value area trading. The volume profile is simply the footprint of smart money, and you want to follow these footsteps because they can have a huge impact on price movement. With the value area trading rules, you can gauge the market direction every single day. Once you start using the value area trading strategy and you get used to it, you'll see day trading with different eyes. And that's our strategy for today. Let's take a quick look at the active trade picks positions. Bitcoin is just going crazy. We've broken the 18,000 level. My stop is currently 16,480, locking in 55.6007 per coin. As usual, cryptos have a tendency to follow each other, and Dash and Ethereum Classic are no different. I bought Dash on Monday right here at 80.78. On Tuesday it hit my first target, and on Wednesday it came down here and stopped out my second half break even. So I'm done with Dash for right now. And of course, Ethereum Classic triggered right here on Wednesday. I bought it at 60454. Stop loss is 514.59, and my first target is 664.51. And lastly, Tesla, my favorite. Triggered this buy on Wednesday right here. I got in at 486.64. My stop is 451.68. First target 509.95. Came very close to that earlier today. Today is Thursday, of course. Hopefully we'll push on up tomorrow and hit our first target on Tesla. And that's all I've got for today's video. Be sure to come back next Wednesday at 3 p.m. as we continue to discuss technical analysis in our trading education series. Don't miss my trading picks of the week on Mondays and my strategy of the week on Fridays right here at Trading Strategy Guides YouTube channel at 3 p.m. Eastern Time. Be sure to subscribe and hit the bell so you'll be notified when these videos come out. Have a great weekend, and I'll see you with a trade pick on Monday.